Good afternoon, everyone. Can you hear me?
No. Yeah.
Good afternoon. Let's all imagine a customer who wants to take out a mortgage. A few years ago, they visit a bank branch or visit a bank website. Today, they will open ChatGPT, answer a question, get an answer, and pick the provider without even talking to us. So the real question is, where does customer experience actually begin? Banks have invested heavily in what happens inside their channels, their apps, their branches, their contact center. But the battleground is shifting. Customer experience is becoming the way people discover you, choose you, and ultimately decide whether they trust banks enough to stay. Let's look at some data to spark a little bit the conversation before I introduce the panel. So at Bain, we've been tracking customer experience over the last years across Greek financial services through our PRISM survey, and this year's data gives us a quite encouraging story. So customer experience in Greek banking is improving across the sector. The trend is real and consistent. At the same time, digital banks, as you can see on the right-hand side, continue to raise the bar. And convergence among the incumbents means that differentiation through experience is both more difficult to achieve, but also more important than ever. So progress is happening, but we can all agree that standing still is not an option. Now, 5 specific things that stand out from this year's data that we ran as Bain. Number 1, primary customers, so customers that declare that their bank is their main bank, show 2 to 3 times higher NPS than the rest. One piece of information to focus your attention. Nearly 1 in 10 customers in Greece already consider a digital bank their primary bank. And this percentage is increasing and will continue increasing. And we see across markets, everywhere we work, that NPS drives customer flows and market share. Second point, digital outperforms human touch points. Well, on the one hand, we see contact centers being a key pain point for banks. Digital channels show a 3 times higher NPS than the rest. Simplicity. This is what customer wants. Easy, tailored, fast, not fancy, not complex, just easy. Number 4, there are moments of truth that matter disproportionately for the customer experience. For instance, sales and issue resolution have the biggest impact on NPS by a significant margin. And last but definitely not least, human access still matters. We see that people want appointment availability at the branch, waiting times matter, and remain key drivers of satisfaction. And when you get all these things right, the business impact is both material and measurable. In Greece, just to give you a couple of numbers, satisfied customers, what we call promoters, generate up to 2.5 times more value for the banks than their detractors, hold 2 times more products than in terms of loans or investments, and are 5 to 7 times more likely to recommend the bank to a friend or family member. That is not a marginal difference. That's why when we look at what most of our leading clients are doing, they're basically shifting from looking at customer experience as a service standard to building what we call a customer value creation plan, where every improvement in experience is explicitly linked to measurable business outcomes. Attract more, serve better, retain more, grow the relationship, and that gives us the full potential. So, clear progress made. Looking ahead, 3 quick things. AI adoption is accelerating fast. 25% of Gen Z users are already today using AI for financial and legal advice. Number 2, expectations have no borders. Customers don't set expectations sectors by sector. They expect the Spotify experience across sectors. And number 3, the customer journey is moving upstream. Today when we Google something, you get an AI result before you get the links below. 40% of search, in 40% of searches, most customers never click through another link, so that reduces traffic. So back to our original question, the next battleground in customer experience may not only be what happens on our channels, but also what happens even before the customers reach us. So with that, let me quickly introduce the panel. 5 leaders from across Greek financial services, distinct perspectives. We have Iakos Giannaklis, Deputy CEO and Chief Retail and Digital Banking Officer at Eurobank. Vasilis Koutedakis at the end, Executive General Manager and Executive Member of the Board at Piraeus Bank. Seve Vasileva, Vice President and General Manager for Greece, Cyprus, Malta, and Israel at Visa. Christina Theofilidi, General Manager of Retail Banking and Executive Member of the Board at the National Bank of Greece. And Panagiotis Georgiopoulos, Chief Retail Client Strategy Officer at Alpha Bank. So let's start where customer experience is ultimately won or lost. I want to start with you, Jakub, if that's okay. Our data shows, as we saw, and I think we can take the presentation down now, that not all customer interactions carry the same weight. So in your view, which episodes have proven most impactful in moving NPS in practice?
Well, thank you for the invitation. Thank you all for coming here. Well, actually, there is no easy answer, and actually, there is no magical stick on that. There is not one journey that if you change it, then you've changed the NPS scores or you have changed the customer experience of the clients. And let me elaborate a little bit on that. Imagine when you're trying to onboard on a new bank and having a new relationship, having a very long bureaucratic interaction, and actually that might last, 30 minutes. The first impression of the bank is not that good. But even if you have a very good, let's say, experience, and then you're trying to make your first appointment visiting the branch, as you correctly said, and it is something that it tells you you can visit the branch after 20 days. So next thing that you're going to say, 20 days, is that bureaucratic, is that a lot of things that you have to do there. But even if you have something like that, let's say you are interacting every day with a bank, a branch, a call center, etc., but it is very bureaucratic, the service is not the best one, you're not having a very good experience when you visit branch or call center or whatever. So that is another journey that matters a lot. But let's say you onboarded correctly, you have made an appointment very easily, you interact with the branch every day very nicely, but suddenly you have a complaint, suddenly you have something that it is a friction time for the bank. And if you want a quick resolution, you don't get a very quick resolution, you get a very long one, or you are not satisfied the way that it's tackled, or it takes a lot of time. So that is another friction time that a bad experience might, ruin all the good experience that you have up to that. But let's say even when you have a complaint, you have a very good experience, and suddenly you want to make a very important decision for you, so get a mortgage loan for 20 years. And when you visit, or buy an investment product, or get a business loan, and the interaction you have with your bank is not the best one. So how are you going to commit for 20 years with a bank that you are not having a very good experience? Why I'm saying all of that, and why I'm trying to elaborate a little bit more on that, actually in every different interaction that we have with the bank, it is very important for the client for different reasons. And because we serve millions of customers, we have different segments of clients that it is different things that it is important for them. So actually, we have to be as good as possible and actually, always changing and innovating the way that we serve clients. Why? Because different things matter to different clients. Now, to give you a financial perspective, I like what you said, Dimitris. We are measuring constantly not only promoters, but passives and detractors with our bank. We've seen that, for example, mass clients, if you compare the profitability per customer that we are having on average for the passives and for the detractors, if you manage to change a passive to a detractor to a passive, you get 2.5 times more profitability than that. And then if you change the passive into a promoter, another 2.5 more profitability for that. So in financial terms, it is very important to be able to understand every different customer segment, be able to change the customer experience in every different segment, in every direction, in every channel that a customer is coming with a bank. But if I have to put a hierarchy on the different journeys that you said, I would name number one, friction time. When there is a friction, you have to be very fast and be sure that you are getting to the essence of the request of the client. The second thing I would say, important decisions, getting a mortgage loan, getting an investment, getting a business loan, it's very important to be sure that you are giving the right perspective. Then I would say customer onboarding is the first time that you interact with the bank, and then I would say the everyday transaction that you might have in order to be sure that you are getting a good service.
Thank you, Jakub. And I love the further financial proof that this topic is of strategic importance. Christina, I'm going to continue with you, and Jakub just gave us a hierarchy of the moments that matter most. If we take now a channel lens, so in your view, what what have you learned about channels over the last year? So where are customers finding the experience more strongest?
Thank you for this invitation to the panel and the opportunity to speak about customer experience, which is very, very important in what we do because we sell service to our customers. Now, we may analyze different channels and try to understand how we perform differently in each channel and what actions we need to take in order to improve customer experience by channel, but the customer sees us differently. The customer sees one bank and they expect to get the best service in every interaction with this bank, be it through our digital channels or physical interactions with our employees. And I will start from the second part because in this era and period that everybody's talking about AI, I think it's important to say that banking is trust, and trust is gained by humans mostly. We see that customers value human interactions, and they value three things: availability, which you also mentioned, knowledge, and empathy. They want to talk to a person who understands their needs and is able to give them what they want. What does that mean for us? It means we need to keep investing in our people, to keep providing training on not just knowledge, but also soft skills, so that they can deliver this top service to interaction with customers. Now, in terms of our digital channels, we see there that the bar is set very high. Our customers expect excellence in every digital interaction. They punish us when a journey breaks at some point, and that's a key point of friction. But increasingly, they trust our digital channels not just for their simple day-to-day transactions, but for more complex processes and for actually getting banking products. So we see that about 30% of retail product sales are done through digital, while in product categories such as consumer loans, that percent may reach 95%. So where we don't do that well and where there's room for improvement. I think we both mentioned the areas. One has to do with more complex processes, such as onboarding, and we all understand how important onboarding is because it is the first interaction with a bank. However, there is still a regulatory framework that makes it harder for us to significantly improve this process. We are working around it, and we believe that AI tools will help us improve and become much better very soon. The other area is any sort of unhappy path, meaning that a transaction that doesn't go well and doesn't go as expected is something that we need to improve on. Traditional banks have an advantage there over neobanks because they have other channels that they can support these process failures. And again, this is an area where we expect a lot of improvement from AI and digital tools.
Thank you, Christina. I'm very keen that we move fast to the AI section, so let's try to be a bit accelerate towards that. Vasily, turning to you, Christina has pointed to complex journeys and some challenges that banks are facing in delivering the customer experience that you have in mind. Now, Piraeus recently was very bold in setting an NPS target in its Investor Day presentation. So you've been very public about the topic. So moving from diagnosis to delivery, of everything you've done over the last 12 months, what has moved the needle the most in your effort to achieve that target?
Yes, thank you, Dimitri. Well, for Piraeus, NPS is a strategic KPI. It's embedded in the executive compensation also, so it's something we take very serious about. Now, in the last 2 to 3 years, we have focused very much on the NPS, not just as a metric, but mainly as a process, as a discipline. Because this makes you talk a lot to your customers and get to know what's their pain points, what they want more, what's their priorities. Okay, now this led us to major improvements in the way our customers deal with the branches and the call center especially. And let me give you a couple of examples on that. Now, there was an issue with the booking of appointments in the branches. What customers were telling us, guys, you're too late in setting an appointment, and you're too late in taking, that appointment at the end of the day. So we put very specific, very actionable targets to the branches and very specific actions with which we managed to reduce the time of the booking of the appointment by 30%. Actually, we managed to have an average time for booking of an appointment 1.6 days. Now, this seems to be good with the customer. So if you manage to be within the timelines that the customer sets for something, then you're okay. And this is also very good for the NPS. Another example was on the call center. Now, the customer comes and says, guys, I need first call resolution. I don't care about anything else, but giving you, an issue, even a complex one, and you coming back and asking and back and forth 10 times to resolve an issue, it's unacceptable. We invested a lot, both in technology, but also in our staff at the call center. And what we managed to improve the first call resolution, but most importantly, by 40 or 50%, the waiting time in the call center was reduced. Now, this gives us an indication that this thing works, and it works very well. And what we are going to do next is additional to that, we will continue with a transactional NPS starting this year and a competitive NPS next year to get a 360 view of our customer transactions.
Thank you. Thank you, Vasily. Anayoti, turning to you. We've been focused so far on journeys, channels, execution, some practical examples. These explain a lot, but not everything. And I think brand, as we also heard in the previous panel, and the reputation of Greek banks is also quite important. So where do you see the Greek banking sector stand on that dimension today?
Thank you very much for inviting, and thank you for your time, for the audience. Look, the brand obviously influences NPS, but there's, depending on the segment. On the consumer segment, mostly with our research, we see almost 40% of NPS decisions affected by emotion. Emotion means affinity with the brand. And with the second being price and service, that is very distant third, almost half of the contribution. When you go to enterprise, things are different, still number one, but equal price with service and brand. So the issue here is, if you become too transactional, is not enough. When you see service being the third factor of influencing NPS, then it's somewhere else you need to focus. And the problem here, I think, is a bit deeper because the surveys shows that 80% of Greeks show mistrust towards the banks together with the political parties and the media. So how you can connect with the customer that upfront, if he or she doesn't see you transactionally, there is a mistrust in the beginning. And this is a thing where we need to focus on, because this is not more like an NPS issue for the sector, but it's also a matter of society and how it functions. When we see a neighborhood, what we expect to see, we expect to see the school, the church, the bank, the police department. So if we don't play the role that the citizens are expecting from us, NPS, especially on the consumer segment, starts to become a question mark. So for us, I think the implication is here how, as a sector, we restore, we reduce this emotional distance that we have with the society, with the customers, and what can we do about it? And I think it's not a matter, of course we need, as our colleague said before, we need to measure journeys and what the scores are defining, because are things that we need to work on the factor side, on the functionality side. But I think here is a fight for affinity, not for every individual bank, but I think for the sector overall.
Thank you, Panagiotis. I agree on this emotional societal dimension that goes beyond processes. I would like now to turn to Sevi to step a little bit outside the core banking system. And so from Visa's position, being at the center of global commerce, payments, what does customer experience, and if you can help us transition this discussion gradually to AI, actually mean? And what do you see as the real brokers to trust and growth?
First of all, let me say that I'm really honored to be in this esteemed audience, and thank you for the invitation. And I will touch base on what my colleague said. So payment is one of these moments of truth, right? And to best illustrate what's happening with commerce, especially e-commerce, in the age of AI, I'd like to give you an example. I think that you will all relate to that. Imagine you're scrolling your Instagram, you're seeing a destination, you feel inspired, you decide to explore it for your holiday, you turn to your AI agent, and in a matter of, let's say, a few seconds or a minute, you're getting pricing, reviews, availability. Now, imagine a next simple step that lets you book this and pay for your holidays on spot without having to do the traditional manual checkout, key in your card payment data, and so on and so forth. So what happens in reality is that inspiration, search, comparison, decision, and payment collapses into a single flow. This is what we call delegation. So the consumer, the customer in this case, delegates to an AI agent, to actually the systems, to transact, to pay on his or her behalf. So we see in the age of AI the enablement of this type of automation, and the AI agents, hopefully very soon, will start transacting on behalf of the customers, and why not only on the consumers, but also on behalf of businesses. This is what we call agentic commerce, and at Visa we do believe that it will fundamentally change how people shop and pay. And from a customer experience perspective, this is about speed. We all speak about speed. It's about seamless, almost invisible, and intuitive experience. Nevertheless, the systems behind are getting and growing more complex. And if you look at it from a payment perspective, it evolves into what we call programmable commerce, which is adaptive to context, preferences, risk, as long as the customer is in control. The decision-making eventually remains with the customer, so the customer is able to set clear boundaries. So this is the essence of what we announced in spring last year, the Visa Intelligence Commerce, which is actually the way we want to enable the whole partner network, the AI agents, because you're not going to trust your money and your transactions with any AI agent. You need to be sure that this is a responsible and secure and safe and resilient experience and interaction that you're going to have. So we launched Visa Intelligent Commerce to actually bring the payment capabilities, the certifications, the protocols for the AI agents, and enable our wide partner network from issuing banks, acquirers, merchants, to actually be able to grow at safe scale the agentic commerce on the foundations that we already know, so that the known consumer protection, dispute resolutions, liability checks, the resilience, the security that we've entrusted in payments over the years are intact. This is what we call foundations of trust. So from a Visa perspective, we'd like to see this as an evolution of trusted e-commerce. And just a very quick reference to the fact that why are we speaking about that? Because it really matters in an automated technology age that we are going to see. Now we are in the AI discovery phase in terms of shopping behavior. Very soon we're going to be into the delegation, where the agent is doing this on your behalf. Most probably not so far in terms of future, we're going to have agent-to-agent transactions on behalf of consumers and businesses, and perhaps even agent-to-agent negotiations. So we need to prepare the whole ecosystem with the responsible mindset and capabilities so that we are able to safeguard this so important trust, because eventually innovation can only actually scale safe if trust goes with it.
Thank you, Sevi. Looking at the time, and I'm keen that we do another quick round, so I promise I'll be very quick on the questions. Sevi has painted a picture of the future. Christina, turning to you. Today, NBG, where customers are feeling a visible impact on AI, are they?
And this is a great question.
And if I can ask everybody to be a little
Dimitri,
bit.
thank you, because that's the real point on AI, what impact we make on our customers' lives, how we improve that. I will try to touch upon three. The first used to be a huge headache for banks 4 years ago, and it has to do with fraud. We all suffered great losses from fraud, and it wasn't just the financial losses, it was also the impact this had on customer trust in our digital ecosystems. We started developing patterns to prevent fraud, to detect fraud and then prevent it. We did it manually. Eventually, we went to algorithmic models. Today, with the use of AI and machine learning, we've made huge leaps. And fraud losses are less than 1/10 of what they used to be a few years ago. So our customers are safeguarded against this very important danger and threat. The second area has to do with contact centers and how AI tools assist our contact centers agents to be more effective, to be able to resolve any customer request at the first contact point, which is what customers expect from us. So as opposed to huge knowledge bases, now they can have AI support on the ground. And the third area is our chatbot, Sophia, which is operational today. We call her Sophia. You can find her on our digital channels. If you have an account with NBG, I urge you to get to know her. Ask her your account balance, and she will give it to you. Ask her if you got paid last month, and she will tell you. Ask you what the last transaction you did with your credit card, and she will tell you. Agentic AI democratizes banking, and this is very important. It makes it more inclusive. It removes the process. It doesn't improve it. It totally removes it and makes it accessible to everyone.
Thank you, Christina. Jakob, turning to you, and I've spoken with Sophia, NBG's board, and she's quite friendly, but she's not quite a human yet. So, you mentioned
on it.
things are irreplaceable.
The picture that uses a real human.
Yeah, absolutely. She looks very human, and she's very friendly. But you mentioned something earlier. There are things that can be automated, and there are things that we need to protect where we need a real human. So when do you draw this line?
Well, in my view, it's very easy to understand where you should include technology, AI, and where to include the human. You go the other way around. Instead of the bank answers something like that, so where should I put technology, where should I put AI to help me? You go the other way around and you ask the customer. So in those cases that the customer want to have speed, want to have very simple questions, very simple transactions, this is the time in order to introduce AI, in order to introduce any kind of technology that will help to reduce time, to reduce bureaucracy, to reduce whatever it might take time for the client to do. In the cases that you want to use human, and I'll give you a couple of examples, is when you want to build trust. Sevi said before about trust. Christina said about empathy. There are a couple of interactions that you have with the banks that you need both, either empathy when you have a complaint, for example, or you want to buy something which is quite important for you, where to invest your money, and sometimes that you need trust, like getting a very long decision that you're going to follow for many years. So where to use what is very clear to me, and I can give you a couple of examples where you actually connect the both of those words, technology and human. So, for example, complaints management. We have introduced AI in order to prioritize, to understand what the customer is asking, to understand about the transactions, to understand, give you the whole view. But at the end, when you want someone to interact with the client, we don't interact with technology, we interact with the human in order to be sure that we're understanding the essence of what he's asking. Another example might be the call center that Christina called, and I have several examples that you can use both worlds. The only thing that you have to be sure about it is that if the two worlds need to interconnect with each other, there is a sequence of things that are happening, and the customer does not understand that this is technology, this is human, and he understands the difference. The idea is that it will be something that has a journey, use of technology, use of human in every interaction that you are having in such a way that it will be very fast, trustworthy, etc.
Thank you, Jakove. Again, looking at the time, we have to be a little bit quick. Vasily, bringing that to you, to Piraeus Bank. From pilot to production, looking inside your teams, what has been some of the successes?
Well, we have experimented with many AI use cases, like we call them. We have implemented a few of them, which we believe have measurable results for our customers. One is definitely fraud, and we managed to actually contain fraud at very low levels at this time. But one thing that has not been said yet is that AI with the use of big data helps us analyze lots of stuff about the customers. So we move from generic rules in every aspect, whether it be fraud, whether it be marketing, to more custom-made solutions for the customer. This helps the customer decide better what he wants to buy, but also helps him understand the language with which we're talking to him. So in that sense, AI and the big data is helping us very much in approaching the customer in a much better way.
Thank you, Vasily, and thank you for being on time. Panagiotis, turn to you. You mentioned earlier a trust deficit. Is AI helping or making the problem worse?
Overall, I'm very positive on AI. I believe, we live and we're privileged to live the rewriting of another chapter in the Industrial Revolution. The question always is, not the what, but how and why are you doing it? So if we go 10 years back, everybody in the room had a digital transformation program. A lot of OPEX and CAPEX went towards this direction. But if you see what was really the intent back then, it was I'm not talking only about the banks, I'm talking about a lot of organizations, is how we can reduce access. How technology, basically we say to the customer, you want help, get the app. If you don't know how to use it, you're not digital enough, so, you're a bad customer, essentially. If we do the same mistake again, and we use AI to raise the bar and push out the customers, and you're not able to talk with a human and use it as a tool to basically reduce access, then we're not serving ourselves well. And by the way, just to remind everybody here that, I don't think most of the organization had a lot of significant savings from the digital transformation. If you add OPEX and CAPEX together, I don't think but it was a new way of doing things, a new experience, it was a hygiene. This is how the customers interact, because the customers, they want hybrid journeys. So for us, if we use an AI to reduce access, it's like, again, a trust killer. Basically, you're trying, what you want to do is to take AI and understand better the customer, educate them for better decisions. So it's a tool for the release time to invest more on him and in the end build trust. So if it's a trust mechanism, it's great. If we do the same mistakes in the past, I think we will have the same history repeating itself.
So AI freeing capacity for a relationship, not another wall for excluding customers. And we need to close with Sevi. Earlier you gave us a glimpse of AI. Now I'm going to ask you to talk to us a little bit about what might be else out there, what comes next. Stable coins, new rails, the digital euro. We need probably another 40 minutes for this topic, but if I could
It's a very big topic, I agree. I think I'll just mark the key and actually I'll give food for thought. So yes, AI is definitely a great change agent, but innovation is not only about AI, and we see innovation in an overall reshaping of commerce and payment stack. And here we speak about new experiences, new rails, and new money. So why is this important? It's important because actually speaking about customer experience, and there are various types of customers and groups and interests, but the customers do value predictability, certainty, and speed, as much as they value personalization, as much as they value that, whatever interactions we have with them from a financial services perspective, they're safe and trusted. So you rightly said stable coins is something that we see increasingly becoming more relevant, because every time we speak customer experience, we need to have in mind the relevance. To whom are we talking, what is the need, and what this new experience is actually providing for. So stable coins are on the rise. It's not theory from niche, they're becoming mainstream. Think of it as just new currency, because they're fiat-based. And the benefit of those, for the group of customers who are interested in transacting with stable coins, it's predictability, optimization of money transfers, if you wish, liquidity, treasury models that this new type of money is bringing on the surface. We've seen a number of use cases, and Visa focuses only on the regulated real-world use cases, and they spread from stablecoin linked cards, where the digital value that you hold, if you have stablecoins, you can use it in your everyday life at the merchant. So the merchant is paid in euro dollars, and nothing changes on the surface. The experience is very familiar. To use this settlement we're doing, very interesting for SMEs, for unbanked. Christina mentioned inclusivity for unbanked segments of population across the world.
So AI as a battleground.
Yeah. So and I will just finish with this. Of course, instant payments with stable coins. I guess my point to conclude is that whether we're talking about AI or new rails or new forms of money, what's important is that customers don't adopt the technology, they adopt the experience. Intuitive, easy, meaningful. So whatever innovation scales out there, it can only drive growth if it's relevant, simple, and safe, trusted.
Thank you. And I think we need to close here. Not all moments are equal. Customer is the boss.
Always.
Battleground is constantly changing. I think we have a lot of challenges ahead of us. But what is, I think, quite reassuring is that there's a shared conviction here across everybody that, customer experience is not just a service mantra, but is a real business growth strategy. So thank you very much. Thank you to all the panelists.
Thank you.